Here's what I'd like to know. Companies don't love negotiating with Apple.
Right.
Apple is a very tough negotiator. We learned that with iTunes, and a lot of the large music publishers and producers have deep regrets about the deals that they struck with Apple to get into iTunes years ago. Why won't they feel similarly about video content?
Well, I think when you think about the environment under which those conversations happened around the music industry, there was, in a sense, there was a really, at that point, an unprecedented amount of change in an unprecedented short time, utter panic, I would argue, within the music industry. And I think there wasn't a lot of time to consider the consequences. It was either do this deal or it felt or be pirated out of business. And I think the television industry has had a decade and a half to sort of figure this out. And so they're pretty tough negotiators also. And my sense is the reason that, you know, Apple's been rumored to be starting a subscription video on demand service or a linear streaming business for that matter for the better part of a decade. It was the tough negotiation with respect to content from the content providers, which has slowed it down.
So, given the fact that Apple has such attractive margins, does the company feel better? Is it more able, ready, willing to spend money on really high-quality original content than Netflix might be willing to? Netflix is margin pressured. Netflix just gave up its deal with Epix.
Right.
We believe in an effort to preserve what margins it has because content's getting expensive. Is that an existential threat to the likes of HBO?
I don't know that it's that simple in the sense that, look at, you know, Showtime gave up its movie deals with all the platforms that essentially became Epix, right? They gave up their Paramount deal, they gave up their MGM deal, their Lionsgate deal, and what did they replace it with? They replaced it with less expensive original television content, because I guess they were feeling that the theatrical stuff was being marginalized and that it was television people really want to watch on the internet. So at the end of the day, there was a programming strategy in as much as there's like a financial imperative. And I think, again, this is more about, if I can come up with one or two shows, it's expensive, but it's not mind-bogglingly expensive, right? For the price of producing 10 hours of an original series that really gets you buzz, that makes agents want to take content to your platform, that makes consumers want to go to your platform, it's marketing cost, Eric. It's very logical marketing cost.
Bottom line, based on the very little we know today about what Apple TV will be, do you think Apple will be successful with it?
I think they will be successful, but not game-changing in the beginning.
Thank you very much, David. Great seeing you. David Bank covers media at RBC Capital Markets.